Let's see, is this gonna, can you guys actually see this? Do tell me if you can or cannot.
Yeah.
I need some. Yeah. Okay. Apologies. For some reason, it's not displaying full screen, but hopefully this is good enough. What I'm going to do first is give everybody here an overview of what Chintai have been working on for the last 3.5 years, and the approach we've taken with regards to real-world asset tokenization. Obviously, this has become RWA, has become the latest buzzword in crypto, and suddenly every project is RWA in exactly the same way as everything has suddenly been AI the year before, and everything was Fintech and DeFi the year before that. We all know how this works, right? So we commenced this journey in 2018, however, and for us, the journey was quite formative because we came out of the crypto roots of building out a token leasing exchange for network capacity on the EOS network during its launch phase. So we built out a full decentralized secondary exchange that operated fully on chain, but we could see there were a lot of needs for different types of tokenization, distribution, and it was becoming very apparent even in those early days that regulatory compliance was not going to be an afterthought for the industry anymore. Now, what we've seen since then, of course, is some really interesting real-world asset tokenization attempts in the last cycle. Notable examples being Binance trying the stock tokens before they obviously had to be shut down. And I think the most impressively was probably Terra Luna at its peak, where we had an actual effective synthetic stock market operating on the chain. Now, obviously, we also know how that's ended up for Do Kwon and others related to that. But that is why we're providing regulatory compliant solutions. So if I could just very briefly introduce myself and also Phillip Hamnett, who's on the call. Phillip is the Chief Technology Officer and co-founder of Chintai. I'm the Chief Executive Officer. My background is more on the finance side, and Phil is obviously on the tech side. So there we go. That's fintech right there in terms of that. The other founder not mentioned on here, Ryan Betham, is the COO based out of Silicon Valley as well. So what is our general aim and what are we looking to do? Well, the first thing that we needed to do was to attain 2 of the highest quality licenses for being able to both issue securities as well as operate secondary markets for them. We chose Singapore as our jurisdiction of choice and the place to headquarter the company, and commenced that process in 2019 and have attained both of those licenses. So we're in a fairly small group that actually hold and now have to operate to the highest financial standards and regulatory standards as a financial service institution. And in terms of the offices, we have a development hub as well, additionally in Frankfurt, where Phillip is based as well. Some people on this call may be aware that we've actually gone through a series of launch events recently in both Singapore and Hong Kong with clients. And examples of these would be DNC, Finstable, GreenMX. We have a number of other clients coming on board fairly rapidly as well. And they're doing a variety of different things with us, from types of crowdfunding related to green tech investment through to carbon, as well as other types of slightly more exotic assets too. And another area we're seeing a lot of traction in is real estate, so fractionalized real estate. And we have complete solutions all built out for these as well with the clients too. And then the other notable one that's really only a week or so old, we have secured a lead investor for the round. We have therefore got 2.5 mil released from that recent commitment, which gives us runway out into 2025. We're also in talks with a range of other both investors and financial institutions about participating in this round. So it's an active thing for us. We're obviously at a slightly different stage to some of the others presenting, but this is very important for us because we're able to now scale with the needs of our clients. We also won the Knowledge Enterprise category at the Singapore Global Fintech Festival last year. So there's a really obnoxious photo of me. I'm not sure what that one is, but hey, listen, it was nice to get some acknowledgement from Singapore, which has been a very supportive hub for us in building out what we're doing, and we'll come on to some of the specifics of that. But first, maybe just to give you a general sense of the types of projects that Chintai has built out to handle. And this, by the way, is by no means exclusive because we handle funds, we handle bonds, and we're able to handle really almost any financial asset. And it's been built from the ground up to configure and handle full on-chain compliance as part of that solution. Carbon credits, we're seeing a lot of demand coming in, both from issuers and from secondary trading. Additionally, we've got a number of related hotel developments in Phuket and other areas of Southeast Asia that are either going to be funded out fully or issued in forms of debt issuance, which are going to be going live on the platform shortly with investors. And then as part of the Chintai Nexus platform, which is you could call Nexus the DeFi gateway of the network in many ways. And what this is, it leverages the checks token in a variety of ways, which is our network token. And ultimately, we are looking at ways of sourcing liquidity dynamically from the DeFi system, as well as being able to use that to deepen markets for our client bases and be able to, in theory, list in other protocols as well. Now, GreenMX are actually going to be going live as part of their VCC fund in December with the Nexus side of things. And so we have a whole portal related to check staking and other kinds of inter-blockchain bridging, all of which we'll be able to demonstrate and give some details of shortly as well. And Phillip, incidentally, will be giving a live platform demo where you can actually see aspects of the platform literally functioning right now as well, just to give people a sense of that. I'll skip the launch event video that we did actually in Singapore, although I'm happy to share the link for that on YouTube if people would be interested. I will say that I'm pretty impressed with the quality of the team that we've managed to build over the last 3 years. We take hiring very seriously at Chintai, and I would say that anybody who's at a slightly earlier stage should bear that one in mind, because the quality of your team is a make or break with regards to your ability to weather and be resilient in tough economic conditions such as we've had, but also to be able to effectively delegate and hand over areas of responsibility too. We have with this team, I think, the right foundation of senior experience, and obviously under this you've got a lot of more junior people who are doing so much of the heavy lifting related to development and others as well. Now, what are we actually doing? Well, I think this slide quite neatly summarizes what I've sort of touched at already. We've built out a series of solutions that can either be used on a modular level, or they can be fully used and white labeled even as well for the clients. And that, for example, is what DNZ and others are doing, where you're logging into a DNZ portal. You can carry out different forms of carbon credit issuance and secondary trading. You can buy and sell fractionalized real estate. All of that is operating on a shared blockchain network that's permissioned, and we'll do a tech deep dive to give you more understanding of what that means. Now, you may be asking the question, well, why not just use a public blockchain for all this? In our case, we're based on the Antelope protocol. Why not just use EOS? Well, for us, the problem with that is that you're having to operate to the standards applied in a given financial jurisdiction. And that requires you to have regulatory compliance controls enforced around markets. And to do that effectively, you need to be able to enforce compliance with a full on-chain solution. And by far the best way to do that is to actually take a permissioned instance where you can add in that custom functionality as well. Now, that doesn't stop us then interfacing increasingly with other chains as well, and that's certainly very much our plan. But nonetheless, I just want to give some sense of why we've made the architectural decisions we have. But our general aim as a team over time will be to work with regulators and get them comfortable with that notion of decentralization of the network, as well as actually redefining how they view asset classes and moving away from these legacy categories that we currently have. Now, in terms of solution features, full types of bespoke issuance is a kind of an inherent feature of this. That includes different types of distribution mechanics, the ability, for example, to be able to take, let's say, for example, a real estate token and actually be able to understand how it needs to be managed, how certain features of it could even be managed, such as things like, let's say, payments related to rental income. For example, all of these types of functionality have to be considered and handled in a given asset class. And then the other crucial aspect of this typically is the need for a liquid secondary market. We haven't just built out OTC and order book, we have a full AMM automated market making mechanism all built out and deployed. It is currently actually switched off for the regulated markets at the request of the regulator because they are looking to pass specific regulation for AMMs. But for Nexus, for example, we are free to do that. So, and in my view, generally, I think AMMs are the future. They add instant liquidity day one. We're also exploring that with some clients where we actually deploy private AMMs for them for things like a fund. So, if you're a liquidity provider, an LP in a fund, typically you're looking at a 5 to 7 year lockup of your capital before you could reasonably assume to get it back. The idea of actually tokenizing, say, a proportion of the fund and deploying a private AMM, where you're no longer limited to those limitations of operating a public-facing market, is very appealing, and it's a powerful example of a tokenization use case where you're actually adding instant liquidity to an otherwise illiquid investment opportunity. Outside of that, though, we're not just looking to provide compliance services or just white label too. A big part of this is the fact that we are operating everything on chain. That isn't just powerful for regulatory compliance and things like reporting in the ability for us to be able to obviously pass back required information to, say, the Singapore regulator. It's incredibly powerful too for the actual users of the platform on both sides. So being able to, for example, fully understand how your investors are, both interfacing with you on a white label instance of the platform, but also potentially what types of trading they're doing, for example. That informs your future direction and gives you an ability to understand how you need to develop out your business. So we do see that level of data that comes from a full-on chain solution as an incredibly powerful competitive advantage long term. Now, Phil, I'm going to hand over to you for the tech stack blueprint and just let you very briefly talk through some of the architecture, if I may.
Sure. As this slide tries to demonstrate, we use Kubernetes and microservices and AWS to essentially govern everything that we run on our back-end infrastructure systems. And everything behind the scenes on the blockchain level is running on the Antelope protocol. On the front end, we use Next.js and Express, which allows us to have a pretty rapid response time and lightning fast use of the application. Everything about the actual blockchain side of things is abstracted from the end user. So when you log into our application and use it, what you're doing behind the scenes is using a blockchain, but you don't need any of the complicated elements like having to remember a private key or have the risk of losing a private key and be unable to recover it or worry about gas fees. All of that is handled behind the scenes, so you don't have to worry about it as an end user.
Yep, thank you very much. I know you'll be doing a tech demo where we can kind of go into some of that more from a live perspective. Just a brief one, I think a lot of people here are going to be familiar with Antelope as a scaling solution. Obviously, for us, it was a very easy decision to remain using that protocol over the coming years. It is still, in my view, an incredibly versatile one. The C++ smart contract nature of that, and with its hierarchical permissioning, is incredibly important for us in that regard. The high transaction speed and low finality is obviously very important too for the ability to handle scale. The fact that it's also low energy consumption is of course very appealing in this modern era where carbon offset is an increasingly kind of geopolitical important driver as well. So for us, the ability, for example, to use one of our clients and simply carbon offset for ourselves every year gives us the ability to just, explain that we're a carbon neutral blockchain, which, whatever anybody's views are on this, it's obviously a useful one from that side of things too. Now, I touched on Chintai Nexus, but, this is ultimately the next big phase of the network's upcoming launch, because this is if you like, the more directly crypto-facing side of the network. This is where anything that's not actually being directly considered a regulated asset can actually operate. And for me, it's more exciting because we get to interface with DeFi and the wider series of other protocols too. It's where we get to actually look to leverage innovative ideas like dynamic liquidity sourcing. And what do I mean by that? Well, as an example, let's talk about the actually still fairly feeble amounts of money in the crypto system. It's about 1.4 trillion in total, which might sound a lot, but remember the US has got 33 trillion in debt. So in that example, we can actually take a variety of different things out there and actually use that to deepen the regulated markets without necessarily crypto users having to even touch or interface with them. That for me is a really powerful service that could be offered that obviously would bring yield in for DeFi holders, adds a real economic value and service as well to the real world markets. And as an industry, I think that's something we have to wrestle with, which is you can't sit there and just generate inflationary fake yield schemes and expect that to not be a zero-sum game over time. We're not interested in that kind of thing, which is why Chex's tokenomics have never been inflationary or anything like that. You know, it's just not built to be that type of token. Now, in terms of potential projects, actually, this is not the best summary. We've got a lot more than this, but you know, just to give you some, I think, because this was more of a sustainability-focused presentation that this came from. GX Labs will be doing biofuel for the aviation industry, and Meld Energy will be doing a hydrogen exchange in partnership with World Fuel Services. So those are two energy-focused ones. But outside of that, we have several bond issuances coming up in 2024. As well, we're working with a couple of financial institutions too on projects I kind of can't go into at this stage, but there are some really encouraging signs coming from the industry with regards to what they're working on. So I think with that, Phil, it's probably time for you to share your screen, and we can move on to the live demo.
Yeah, Mr. David, excuse me, sorry to interrupt your presentation because time is up. Right now is a live question right now, so.
Okay, then no demo for you lot then in that case. No problem.
Yeah, thanks. Yeah, thanks for the Chintai for the fantastic presentation. So now let's, Mr. Omer can give one question to the Chintai, and the Chintai team will finish the answer in the 1 minute.
Yeah, your first question is, can they see the demo? But we're not allowed, apparently. Sorry.
Thanks for that. Okay, gentlemen, good presentation. Very interesting. I actually have two questions. One, it's more related to your materials before this presentation. I'm going to ask that one, and then I'm going to get into some discussions related to your presentation itself, if I could. So first question, related to you have psychological experts on your team and you focus on mental health. Tell me about that. Like, that's very interesting, how you've implemented that with your project. That's the first thing.
If you're referring perhaps to Ryan as the co-founder, he does have a background in that. That largely comes down to when I was looking at team selection for the senior team and the company in its iteration today. I've always felt that an incredibly important part of growing out any business is both team culture and the people within it, ultimately. I've worked in some very toxic work environments in my time. I'm not going to mention them, but let's just say some of them were banks. And I've worked for some that have been fantastic, and they've also been banks. And I don't think it's a coincidence that the more successful ones that persistently over time outperform the others have the best working culture. So for me, I see the COO role as an incredibly people-facing one, whereby you need to be able to defend the culture that you have instilled within a company and ensure that you're embodying a set of principles that are very clearly defined for everybody. And that's something we've done from the outset, which is to say we have extremely high retention partly because of that, because people feel good about working with one another. We have a very respectful work environment, which is professional and team focused. There's no place for egos and arseholes, basically, if you want me to give the brief summary on it. But that is to a large extent why I felt his background, not just running a business in that area, but really understanding people, was such a crucial one. And certainly it's proven to be the case as we've scaled up. As you would imagine, people become an increasing challenge within that dynamic. And so yes, it has been valuable.
Excellent. So, I mean, at Rocktree Capital, we focus on what you just mentioned, behavioral neuroscience and psychology specifically, one for our team, but also to assess founders and to be able to help founders grow. So I think that's a really strong aspect of your project. Another thing, now let's get more into the presentation. Another thing Rocktree did is we actually, Rocktree developed the first tokenized real estate project in New York City. That was back in 2018. So what's that, like 5 years?
You were ahead of time, for sure. That was very innovative back then. Yeah.
Very early. And so a couple of areas that I just want to get into regulatory and also real estate tokens. So first of all, regulatory, aside from Singapore, which jurisdictions are you seeking compliance? And then the second part is real estate tokens are in most jurisdictions seen as security tokens, not utility. So how are you dealing with that aspect of it?
Yeah, absolutely.
And a lot of jurisdictions are required to register. So how do you deal with that?
You're absolutely right that they are not considered to be an unregulated asset class. Whether they're viewed as real estate, a commodity, or even a security, they are generally considered to be that. And so we are having to treat any real estate markets with that very much in mind. So in terms of, firstly, your question on expanding our regulatory coverage, licensing, we are in active investigation for extending licensing over time into both Hong Kong and London at present, UK. We are also taking a look at the Middle East, and we actually are about to get the BVI license, which partly relates to Nexus, but that's a relatively small thing. We are, on the other hand, mindful that there are high costs that go hand in hand with licensing, and so leveraging the current licenses we have to the maximum in the year ahead is the top priority as well at this stage. It's definitely easier for us as a licensed company to come into another jurisdiction, be able to evidence that we are operating to the standards of one of the highest, most respected financial jurisdictions, and be able to get licensing, I think, a little bit more easily there as well. So that's to answer that side of things. How do we handle the sort of segregation side? Well, we are built to operate completely segregated, regulated markets as required. So whether it's a completely private market that somebody doesn't want anybody but a very small subset to operate within, through to just simply doing things like excluding, say, retail and a certain number of specific geographic jurisdictions, we can handle all of that as part of the onboarding process and the whitelisting or blacklisting of market participants. So, for example, you might be able to participate on a Singapore real estate issuance, but you might not be allowed to on a US one instead. Now, we are not limited just to Singapore, for example, with these licenses. I mean, we have US clients that will be doing real estate issuances through us as well, and one of them actually is a shareholder in the company as well. But in that example, US investors who are accredited high net worth, they will be able to participate in that without an issue. The only real difference for them is the onboarding process involves an international bank transfer if it's fiat for the on-ramp. And beyond that, to a large extent, it's a seamless process. I would be candid and say I think the US is sending out too many confusing signals for us currently to necessarily risk that. Going for licensing at this stage. I'd like to see more certainty on the ground there.
Yeah, thanks so much, David and Philip.